Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Tuesday, April 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here have May corn up 3 3/4 at 461. May soybeans were up 3 1/2 at 10.18 1/4, and May Chicago wheat was up 1 1/4 at 5.38 1/4. Those are not April Fool's numbers. We were, in fact, higher overnight. Couple of things here this morning. Yesterday, winter wheat crop conditions were released by the USDA. Unchanged in the good to excellent category in Kansas, 49% good to excellent. Oklahoma was down 4%, 33% good to excellent. And Texas dropped 5%. 26% good to excellent there. So did see a little bit of an overnight reaction after those numbers were released. We will get USDA crush numbers here at 2 o'clock this afternoon. We're looking for a 188.7 number is the estimate. That would be down from February's 193.4. Also released in the way of news, Secretary Ryland gave a speech yesterday. The USDA is set to release a little over $500 million that were earmarked for biofuel expansion projects, which is certainly a good sign with the administration supporting the renewable fuels. And that got a positive feedback from industry folks yesterday. And here again this morning, oil markets were up between 50 and 60 overnight. So that was good to see as well. Guys, we got through planning intentions and stocks yesterday. By all accounts, pretty much a dud, as you look at March reports. We're generally consumed with high volatility and whipsaw in markets, but really, I guess the trade had it pegged to a certain degree. It's good to see that corn with a high print, a 95.3 million acre number, still hanging in there, to be honest, price action wise. So Jace, maybe a few thoughts as you've had kind of a night to digest the markets, and we'll throw around the room.
Yeah, thanks, Dan. Yeah, I guess the report was the option sellers, came out the winner there, right? Volatility got smashed, and he, put buyers or call buyers going into that report just got hammered. Yeah, I agree with you, right? The markets kind of got it right. We broke into that report. A lot of people are talking bigger corn numbers. I think the disappointing thing from that report is the total corn and bean acres were up, right? So you didn't really get a friendly bean acre number. It's just kind of too many corn and beans right now. I kind of said this yesterday from the initial reaction, but good to see the price action. Yeah, I mean, even with some of those numbers, right, beans got beat up a little bit, but corn, at least old crop corn, finished higher in the day, and then we had some follow through today. So technically it looks really good. I mean, I shouldn't say really good, but technically it looks like we're trying to carve out a bottom in corn. Now I think, right, we got to get it planted. Right, we've talked about this for a while. There's still a lot of marketing year left, so there's a lot of things that can happen. I think as I digested this report, obviously I was hoping for a friendlier report, but now my head goes back to, okay, this could be another tough marketing year. If we make a crop, and I try to think about some analog years, and people have talked about this, right? But we've gone through bear markets before. So you go and look back at some of these years like 2015 or 16 or 17, and you had, low prices, but you had kind of seasonal moves from fear of weather and these different things where you had pricing opportunities. And so I think we go back to, you got to kind of have a plan, right? We talked about crop insurance. We talked about, how we use that floor. But at the same time, right, you're gonna you're gonna plant a crop, and you still got to market that crop, right? So I think you still have to go, okay, this might be a tough marketing year, and there might be opportunities. And I think you got to, be able to jump on those if they present themselves. So I don't know, Dan, that's where my head's at. I don't have any, grand ideas or anything, but kind of classical marketing stuff. So
it'll be interesting, too, if you look at like funds were selling corn pretty extensively to get almost back to kind of a more neutral position ahead of the report. And we saw open interest 35,000, 432 yesterday. So I guess commitment to traders on Friday will be interesting to see if they did they buy corn, feeling a little more comfortable, or I guess just a little bit better after seeing the number and knowing that was kind of what was projected anyway.
Yeah, obviously these the tariff news is, isn't good for our markets right now. I think the funds built a position and then obviously have liquidated quite a bit of it because of tariffs and slowing down of demand and some of these things. I think they're on the sidelines. I think Justin has been making that point for a couple of weeks, right? Money's on the sidelines, trying to know where to put it. And I still think that's kind of the case, right? I don't know if this report, for me at least, it's like, it's kind of a, I don't know, how I'd want to position myself right now either. The only thing I would say is, we still go back to, you got some pretty low corn prices. You're at these crop insurance levels. If you're a bear in corn, especially for new crop, it's like, okay, you got this report. It was relatively bearish in my opinion, but now what, right? Like if you want to make that next, if you're short corn and you think you were going to have a big crop and there's plenty of corn around, and you want to make that next 50 or 70 cents in corn, it's kind of a long road from here. Sure. In my opinion, right? It's like, God, you got to get through planting,
painful.
You got to get through weather, and it, so it's almost like, God, do I sit on this position? I got to ride this thing out of growing season, or, do I take the money off the table and look for a better spot? So,
no, it's interesting too. Talking about outside markets, we're going to get jobs report on Friday, but looking at gold and bonds, it's clear to see that money has been funneling into quote unquote safer alternative assets classes, with tomorrow's impending tariff talk. And listening to the president yesterday afternoon, he seems to think that he's going to be fair and soft, but what is that actually going to mean? I mean, is it going to be one step in a playbook to trying to get better trade deals? I mean, you look at the last time, there's also news this morning or stories out this morning about, potential financial aid packages for farmers again this time around. Last time it was around $23 billion and to keep everybody rocking and rolling. So I mean, it's just a lot of moving parts here for the next.
Yeah, it's not like hasn't mentioned farmers and how he loves farmers and they're going to have a great time and we're going to have fun and all this stuff. Yeah. So I would imagine we're going to have fun as a trade agreement that benefits them, or direct payments or something to make them have fun. So I don't think anybody's having a whole lot of fun right now.
No.
No. Yeah, there's a lot of stuff going on too, right? Did you guys see the thing with the Chinese and the Japanese and the Koreans supposedly joining together on tariff stuff against the U.S.?
That's a tariff package. Who would have thought that?
Right. So man, there's just some geopolitical things that, we've never seen before, right? And in our lifetimes. How do you navigate all this stuff? So interesting.
It's gonna be headline fun. And I think last piece of kind of fundamental farmer related news, but I not saying that the market's gonna be overly in tune with it, but there are portions of kind of that southern Midwest that are slated to get an inordinate amount of rain in the next 10 days. 15 inches kind of scheduled to show up kind of through Arkansas, Missouri, bottom half of Illinois into western Tennessee and Indiana. So that sucks, that for those guys that are trying to get rolling here, but we'll just have to keep an eye on it. 15 inches of rain's a lot of rain.
Yeah.
So anyway, you slice it.
Yeah, I mean, it looks like that storm is going to be like 302 miles long. So you'll get a little bit of reprieve in Oklahoma, Kansas, and Texas, where they need it. But getting that added moisture to the parts that don't, that's going to delay planting. Looks like the first half of April is going to be wet. Second half is going to dry out. So looks like we'll get our opportunity here.
Well, and we just do it so fast, right? I mean, we talk about it every year. We get freaked out. It turns out anymore, Jace, fundamentally speaking, it's like it's got to be the drought dry is the biggest deal. As fast as we can plant now in technology and things of that nature, we're gonna, in some capacity, we're gonna get it in, right?
Yeah. Yeah, it was kind of funny talking to a grower, one of our customers yesterday, and he said he might start here in a little bit, and he said he got a neighbor who, they started, and he caught up with them and they finished. He's like, it's just, like, what happened? And like, well, we just started going, we got excited, and we just put it all in.
Oops, I'm done.
He's like, they don't, that's all they do. They don't have any cattle, and this grower, has other chores, but he's like, so they'll, not surprising that these growers did that. And they're willing to replant and have the ability to do it if that's the case. But it to your point, right? When the weather turns and everybody's kind of, excited to get out there and get it planted, we can do it real quick. So, and that kind of makes me nervous too. I mean, if we do get it planted, right, and we do have some good weather and it, we get it in a timely fashion, and then we get good stands and we're looking at it, what's the market going to think? It could be a tough road in the first few months if that's the case. Some of those years, right, you do kind of are weak through the spring because of that, and then you run into a lot of volatility in the summer. What kind of year we're going to have, nobody can guess, but so you just kind of have to, I don't know, kind of take it as it goes, I guess.
Yeah. Well, lean on, I mean, we've harped on it, but at this point, you're leaning on your crop insurance, you're leaning on your government payments. Go get it in the ground, and then kind of see where the dust settles. No pun intended. And then, we'll try to figure it out from there. But there's not much else. I mean, at 445 with budgets and everything the way they look, I mean, not much to get really worked up about right here.
Yeah. Yeah, we've gone through, right. I think the toughest marketing year I've ever been through last year. And this is starting out to be the second toughest so far,
Right.
And the drawdown in working capital that we've seen for a lot of guys this last year, and then this is going to be the second time in a row. I mean, it's going to be the quickest in our lifetime, right? This is a tough environment. And I think it greater than the last kind of bear market we went through personally. So something's got to give, something's got to change. I mean, it can't just continue on, I don't think. So.
Yeah, and we'll leave it for another day, Jace, but I just think, like, for our generation too in farming, it's just not only is the barrier of entry impossible, but some of these conversations with banks are just, I mean, unbearable. And there's just ways of doing business, I think, that are transforming themselves, and maybe it's positive for our industry, right? Maybe some of the checks and balances, or some of the things that we've got to do to run our business the way that a business runs, that maybe prior generations weren't overly focused on. Maybe that's going to be a good thing for us long term, and for our generation. So we'll have to see. Rye, starting to see a little bit of liquidation in the cattle, which thought was kind of interesting, looking at commitment of traders, and then kind of second lower trading session in a row for hogs. But what are your thoughts here as we start the morning?
Yeah, I mean, overall, it seems like it was some kind of liquidation, but really it just seems like we're seeing a shift from April. We got option expiration here on Friday. We got first notice day coming down the road the following Monday. So I think that's kind of expected. I don't think it's a big concern kind of thing, even though, like, we are kind of in one of the more vulnerable seasonal timeframes for price. Just April's historically not a typically great month going into May. This is where you run into some issues. price wise, kind of between demand here. So, and everybody's waiting for grilling season to fire up. But generally speaking, I mean, like, we have been in this bull market. We have kind of proved that dips will be bought here pretty aggressively. April, June, still holding the 10-day moving average, still coming off of last week's record high close. So, I mean, there really hasn't been much to shake the market out. You had beef prices back up yesterday. Choice was up 244, select up $1.33. So we're just kind of right back to the higher end, of what we were thinking. So I think there's just going to be a little bit of a capital shift kind of earlier this week and repositioning going on just because you're running into April 1st notice day. But, just kind of waiting to see how cash is really going to shape up, especially if beef prices stay firm. So I think just overall, it seems like there's a lot of optimism, especially in the north. And there is a little bit of concern with these storms that are rolling through. We could see kind of wet, muddy conditions, kind of taking weights down. So, I mean, overall, I think that is something to keep an eye on next few weeks. And I think the market's going to see it, potentially as a little bit more of a friendly situation. But we'll see how that affects the weights in next few weeks. On the hog side of things, still a sideways chop. There's no question that everybody's pretty freaked out about what could potentially happen with the tariffs, or retaliatory tariffs for that measure. So it's just a waiting game right now. I think more is to be known. I don't think anybody really wants to stick their neck out too much, just considering we have seen the funds really reduce their exposure, still not long. And I think generally speaking, from a speculative standpoint, June and July are really going to be the focus just to pick up some kind of seasonal momentum. But obviously that has kind of just come to a lull. We're not seeing those kind of big, haven't really seen too much enthusiasm to take us out of the range that we've been in. But even though, we've seen cash prices kind of level off here, 88.49 up 19 cents yesterday. Hams and bellies both supported the cutout. So there still is some good news here. The business is still going to go. It's just a matter of where and how, if these tariffs or retaliatory tariffs are going to be put in place. So we'll just, once again, just kind of wait and see what happens.
Very good. Appreciate the feedback there. One thing to note again, reiterate, crush, USDA crush will be out at 2:00 Central here this afternoon. We'll take a look at that. Again, 188.7 is kind of the number we're looking for there. But we'll take a look and visit about that in tomorrow's War Room. Also, today's April 1st, final day of our special offer that we've had for the last month or so. Jack's got more info in the outro. But certainly if you need to visit about where you're sitting, how all these things come together in terms of marketing, crop insurance, the whole 9 yards, give us a call. We'd love to visit with you. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. Keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.